Good morning, everyone. My name is Rafael Andrianto, and I'm from Bandung Institut of Technology, and I'm going to present to you my paper about evaluating the effectiveness of financial auditors in detecting financial fraud in Indonesia's retail corporations. So first up, the abstract. The main objective of this paper is to understand the audit process of a retail company in Indonesia and compare the standard operating procedure of their internal audit towards the external audit such as PwC, EY, and etc. Through thorough examination of this SOP, we can assess the current practice of internal and external audit and find the similarities, differences, and sum up to a conclusion. Ultimately, this dissertation aims to contribute valuable insights into the effectiveness of fraud detection mechanisms in Indonesia's retail industry and proposes recommendations for enhancing this reliability. So next, the introductions. Big corporations have a pivotal role in Indonesia's economy. These entities contribute 39.5% to the country's GDP in 2019, equivalent to 15,833 trillion rupiahs. Given their significant impact, these entities often require substantial funding to sustain and expand their operations. This need for capital drives them to seek investment from external sources. However, these types of investors need transparency towards their financial statements, and this is why auditors are important, whether it's internal or external. We need to develop a financial statement that is pure without any sabotage. The problem statement. In the advantage of Indonesian large economy, corporations have been crucial in deriving the nation's wealth. However, this progress is often overshadowed by financial fraud cases in Indonesia, such as the huge corruption case by Waskita Karya, which causes them to be on the verge of bankruptcy. The amount of money which was considered as fabricated transactions is a lot, nearly 2.5 trillion rupiahs. This significant loss highlights the vulnerabilities in corporate governance among the big corporations, as well as risk concerns in regards to the effectiveness of the auditors behind them. So the literature review that I've taken is first, the origin of fraud diamond model. Initially, Donald Searcy developed the fraud triangle theory. The theory was developed in 1950 to explore the reasons of why people commit embezzlement and the factors we can dive into these people within the economy. Searcy developed three factors, which is pressure is non-shareable, the opportunity to do embezzlement, and rationalization itself. But the diamond model explains that it has a fourth one, which is capability. Next, the fraud pentagon model. This was the next, or what do you call it, extension from the previous model. This model explains further past both theories. This theory adds an additional factor, which is arrogance. This model was developed by Crow in 2011 because he examined that both previous models were limited. He found that the actor committing these frauds needs certain type of arrogance, which is needed to make one believe that the rules and regulations inside a company do not apply to oneself. Next, the implementation of AI and machine learning. Financial state institutions are struggling to detect financial fraud with high accuracy. This is why they need to incorporate AI as well as machine learning. One reason they are struggling is because institutions such as this typically lean on statistical measures, such as mean and standard deviation models. However, this approach isn't exactly the most efficient and effective. It demands a lot of human effort to pinpoint those suspicious activities. Some of this implementation of AI and machine learning can be seen through fuzzy logic and logistic regression, random forest, naive Bayes, and etc. But the three most commonly used in audit is naive Bayes method, artificial neural network method, and support vector machine method. For naive Bayes method, this statistical approach is used to identify financial fraud by identifying patterns within financial data. This is based on the Bayes theorem, where it calculates the profitability of an event occurring based on the knowledge we have. Artificial neural network method. This method represents a sophisticated computational approach inspired by neural networks of the brain. This method uses AI to mimic the biological neural network through identifying complex and nonlinear relationships in a large data set. Support vector machine method. Support vector machine is a machine learning algorithm mainly used for classification of tasks, which include auditing. The last one is errors in internal auditing. There are several types of errors in internal auditing, such as commission errors, omission errors, principal errors, duplication errors, compensation errors. These types of errors are inevitable to be found in audit, and usually to lessen or negate the impact of these errors, we need thorough auditors, and which usually takes quite a lot of time, and that's why AI and machine learning is best way to reduce this time. The hypothesis. The initial hypothesis was that both internal auditors and external auditors have the same format to review revenues, and is also well structured with little room for improvement. To find the answers, there is two research questions which are written below. How do retail companies detect financial fraud in their revenue stream? And what are the key challenges in detecting financial fraud? So the methodology we use is, first, through this collection of data, we can analyze the data in several aspects. From the likelihood of errors, complementing the quantitative data, and etc. So we use the data from PwCs and compare it with Indonesia's retail company. In this case, we use AccessMove, and we use to the quality itself of the data and compare it to find the deficiencies, good things about it, and as well as add recommendations. We will also use data taken from the PCAOB, which is quantitative. So first, for the data taken from the PCAOB, there were more audits faults in 2022. 40% of audits had flaws compared to 34% and 29% in 2021 and 2020. Respectively, this rise begs the question of whether necessary auditing standards are being followed and demand internal reforms in audit companies. So from the data taken from PwC itself, there are 7 steps for audit, which will we dive later on. Data taken from the Indonesian retail company, in this case AccessMove, we can see that these technologies guaranteed a straightforward method of verifying financial transactions by concentrating on the direct comparison between currency flows recorded at a POS. So first, data taken from the PCAOB. The analysis suggests that organizations may be finding it difficult to maintain consistent compliance in certain areas because these deficiencies are typically recurring problems, which we can see from the previous data. The procedures used by auditing firms for audit execution and quality control need to be greatly improved. The PCAOB warned that it anticipates a large rate of failures with relation to particular non-compliance issues. So the findings itself taken from the PwC SOP was, first, the planning and risk assessment. Planning and risk assessment actually involves the auditors to familiarize with the clients itself, as well as identify risks involved in the client's industry. They will then set materiality and plan the audit itself. Next was internal control evaluation. This involves PwC understanding their clients' control environments and activities, as well as evaluating the deficiencies and understand effectiveness of their internal audit. Next is substantive procedures. This involves them conducting detailed testing of the transactions and balancing. In this process, there will be vouching, tracing, and confirmations. Auditors will also analyze the financial information through a reasonable relationship with the data. They will also assess whether the transactions are recorded in the proper accounting period. Next, audit evidence. In this step, auditors will collect appropriate data evidence to support the audit. Next is the review and supervision. In this step, auditors will ensure the work of all team members amongst the analysts. Reviewers will overlook to work for analysts to maintain quality control and ensure the adherence to PwC audit method and standards. Usually there is A1 or R1. A1 is usually the ones who conduct, and R1s are usually associates who is tasked to review. Completing and reporting. In this step, a review of the financial statements will need to be done through to the reporting framework, which is used and consider the events after the balance sheet date. But before the issue date of the financial statements, they will also start issuing the audit report along with the opinion. Communication with management and those charged with governance. In this step, they will communicate the findings with management, discuss the findings, and strategize recommendations to the committee and those who is in charge with governance. Next, this is the data taken from AccessMove. So from the SOP, we can see from AccessMove, we can see that mostly they are traditional, where they check if the items have been delivered, if the items is not in the inventory anymore, and check whether the amount of money has been sent. They usually check it with the receipt and the amount of money received from the people who is in charge. These are both the data taken from the accessible SOP. Next, the findings. So in similarities, both accessible and internal process and PwC audit emphasize thorough planning and preparation to understand the client or business environment and set objectives. This step is crucial to ensure that the audit or operational review is tailored to the specific needs and risks of the organization. In addition, both processes prioritize the evaluation and testing of internal control to ensure the effectiveness and reliability of the operations. And the differences. The scope and focuses of the two auditors is different. Access's internal process is primarily concerned with the operational workflow of the order processing, delivery, and financial transaction within the company. In contrast, PwC's audit process had a broader focus, encompassing the auditing of financial statements, assessing risks, and ensuring compliance with financial reporting frameworks. So, in conclusion, both SOP are designed to ensure accuracy, reliability, and compliance in their respective contexts. Access's internal process focus on operational efficiency and accuracy in order processing and financial transactions. PwC's audit process, however, has a broader scope, focusing on comprehensive financial statements, audit risk assessments, and compliance with financial report standards. Despite these differences, both processes share common elements of planning, internal control evaluation, documentation, and communication. The methodologies and applications of these processes differ, reflecting the specific needs and objectives of each organization. In conclusion, although auditing in modern retail comes with considerable challenges, the advantages of stringent and internal controls and precise revenue recognition outweigh the drawbacks. These practices safeguard against financial mismanagement, and fraud, thus fostering sustainable business growth and boosting the company's reputation in the market. However, despite this, both internal and external auditors need to encompass or need to assess and use AI and machine learning method to create a more efficient and a more effective result. Because with this process that they both have, they are prone to human errors. And with human errors not doing the grunt work, we can make the auditors and clients' financial statements more accurate. Thank you.